Yeah, hi friends, let us continue with Group 2 Accounting Standards Revision, the remaining part. Yeah, as you know, in my earlier video, I have already completed 5 accounting standards revision. Now, the important, many students are asking, there is accounting standard 22 basically, and some other obviously remaining standards also I'll be completing. Okay, right. Yes, let us get into the subject, that is accounting standard 22, that is taxes on income. Yes, taxes on income. Yeah, the point is very clear here. It is only on the, that is nothing but taxes on income means it is related to income tax, that's it. Income tax, this is not applicable to GST. Anyhow, property tax is not there now, that is also part of this, but no, yes, just simply I'm telling you, it's not applicable to GST. The GST is taxed on the sales, not on the income. Correct. Now, that's why this is not applicable to GST related issues. Only income taxes, that's it, is applicable. Okay, why the standard has come? Basically, if you look at, yeah, this is actually, this is to ensure the matching concept. That's all I can say. This is to ensure matching concept. What do you mean by matching concept? Matching concept here, you know, current year income should be taxed in the current year itself. It should not be going to last year, or it should not be taxed in the next year. I will tell once again, current year income, or you say profit here. Current year profit should be taxed. Yes, it should be taxed in the current year only. In the current year only. Why, sir, isn't it not taxed in the current year in general? Yes, it is not. Why? That is because of the Income Tax Act rules and regulations. Yeah, before we get into the subject, I mean to say, example, current year, say example, as per the profit and loss. Okay, as per the profit and loss, let us say is equal to 1 lakh rupees is my profit before tax. Correct. What is the tax rate? Let us say tax rate is equal to 30%. Assume this 30% includes your surcharge, everything including 30%. Just understand as assumption. Okay, fine. But actually, even though your income tax, notice that as per profit and loss, this is the profit before tax 1 lakh rupees. But if you look at the Income Tax Act, the taxable income over there, let us say taxable income can be 80,000 rupees, or it can be 1,50,000 rupees. Why it can be? Because of so many sections of Income Tax Act. Yeah, sometime 1 year you may be paying more tax rather than what you are supposed to pay. Not as per the act I am saying. Compare it to our P&L. My P&L income is 1 lakh. Okay, but taxable income as per the Income Tax Act provisions, okay, it is 80,000. Yeah, if it is 80,000 means what? You will pay 30% assumption. 30% you will pay means 24,000 only you are paying. This is situation number 1. This is situation number 2. Yeah, correctly. That means what? Out of 1 lakh rupees of your profit as per the P&L, correct na? You are paying how much? 24,000. What is the journal entry for this 24,000? Okay, what do you say? Tax expenditure account debit to provision for tax, that is equal to 24,000. 24,000 you will record. Correct. So in the P&L, what do you say? Income tax. If I write 24,000 rupees here, just observe how much you taxed actually income. Only 24% is what charged. But actually your income tax is how much? You are supposed to charge 30%, but wherein it is charged only 24% is only charged. Are you getting my point? Correct. So then how do you say it is matching concept? That means 20,000 which you are showing in the current year P&L is not getting taxed here. It may be taxed in the next year. That means, see, current year income should be taxed in the current year. That is what the matching. Correct. Now, if it is getting taxed in the next year, then how is it matching? Obviously not matching. You are not following the matching concept. That is the reason. What are we saying? Array, your profit as per the P&L is 1 lakh, but taxable income as per the Income Tax Act is equal to 80,000. That means actually you should have paid 30,000, but department is saying, income tax department is saying, pay only 24,000. Okay, fine, I'll pay 24,000. I don't want you to pay more than 24,000. But to ensure the matching concept, We will say, correct sir, we are supposed to pay 30 but we have paid 24, means the remaining 6,000 pakka we will pay, but that may be paid in the next years. It may be immediate next year or it may be after few years. That means, are we liable or not? Yes, we are liable from the accounts angle. Yeah, how you are saying you are liable, sir? Yeah, see, 1 lakh, over 1 lakh I have to pay 30,000 rupees. Yes, I have to pay 30,000. But how much I paid? 24,000 I paid. That means balance 6,000, am I liable or not? You are liable. That's why what we say as per the standard, yeah, create deferred tax liability. That is what we say. Okay, so how do I create deferred tax liability? Liability, so DTL, that is equal to 6,000 rupees, I'll say. Correct, that will be liability is created, means expenditure is gone up. So deferred tax DT, deferred tax expense account to debit 6,000 rupees I will record. That's it. So here deferred tax expense 6,000 rupees is coming to profit and loss. That means 30,000 rupees is your tax expenditure. See, now over your P&L, in the P&L you taxed 30% correctly. Right? That means we ensured the matching concept. Current year income of 1 lakh rupees has been charged with correct percentage of 30% tax in the current year. Getting my point? Right. Suppose if you take the second situation, yeah, suppose taxable income is 1,50,000. Yeah, maybe due to many reasons. I'll tell you that reasons in few minutes. Yeah, that means, what do you mean by 1,50,000? Taxable income is 1,50,000. Now into 30% if you apply, how much do you pay? 45,000 rupees you will pay tax. Correct. So under that circumstance, I am writing here PBT once again, my dear. Okay. Yeah. If I say PBT is equal to 1 lakh rupees, if I say tax expenditure, that is tax expenditure is equal to, which is payable as per the income tax, 45,000 rupees. That means what is happening? It is happening like 45% I am getting taxed in the current year. But actually my tax rate is 30%. That means, am I paying more money or not? Yes, you are paying more money. You paid more. Yes, we paid more. How much more you paid, sir? Yes, we paid 15,000 rupees more. Correct. If 15,000 what you paid more, isn't it like prepaid expenditure? Yes, it is like prepaid expenditure. It is like prepaid. Got it? Yeah, it is prepaid, means isn't it asset or not? Yes. That's why what do we say? This is deferred tax asset account debit 15,000 rupees. I'll say you paid more, means it is income. Asset is increasing, that is income, that is deferred tax income. Or expense also you can say credit. That's it. Yeah, that is equal to 15,000. Now if you observe deferred tax income or deferred tax expense credit balance, anything, I don't have any problem. Yeah, if you say 15,000 rupees positive, correct now? See, expenditure is negative, means credit income is equal to positive. That's it. So net effect is equal to how much? 30,000 rupees. With the help of deferred taxation, we can ensure that current year income is getting taxed in the current year only without any problem, right? Otherwise, if you compute as per the Income Tax Act rules and regulations, and if you put the same amount in the profit and loss, then obviously that number is not going to be the perfect number. Got it? Right. Sir, why is that differences are coming, sir? Why my profit as per the P&L is 1 lakh, as per the tax it is 80,000 or 1,50,000? What are the reasons? Okay, right. First, E24,000 whatever is there, we call it as current tax. What do we call? Current tax. Sir, what do you mean by current tax? Current tax means tax as per tax payable as per Income Tax Act. As per Income Tax Act, that is called current tax. Tax payable as per Income Tax Act is current tax. Okay. What is deferred tax, you mean to say? DEFERRED. What is deferred tax? Deferred tax, which is a tax as per accounting standard 22. This is calculated for the purpose of accounting standard 22. This is to ensure, with the help of the deferred tax only, will ensure the matching concept. Perfect. Okay, now the question. Yeah. Now, why accounting income? What is accounting income? What is accounting income? Accounting income is nothing but profit before tax as per P&L. Profit before tax as per P&L. That is equal to, in my example, let me say 1 lakh. Okay, what is taxable income? Yes, what is taxable income? This is as per Income Tax Act. Yes, as per Income Tax Act. Let us say that is equal to 80,000 is coming. Okay, what is this difference? E difference is difference, correct? Now this is what difference, but E differences are of two types. Okay, E differences are of two types. Yeah, for this E 20,000 rupees, do you create deferred tax? No, it depends on the type of difference. Okay, I'll say E difference is 20,000, correct? Now E differences, otherwise I'll do like this. Yeah. E differences, what do we record? We'll say timing difference is one point. Timing difference. The next one is permanent difference. Permanent difference. Yeah, first one is timing difference, next one is permanent difference. Yeah, listen carefully. If it is timing difference, we create deferred tax asset or a deferred tax liability depending on the situation. Okay, if it is a permanent difference, we do not create deferred tax only. No deferred tax asset, no deferred tax liability at any circumstance. Got it? Right. But fine. But before that, what is timing difference you mean, sir? Yeah, that is what required. We will learn that. What is timing difference? This is a difference which is arising in one particular year and which is capable of being reversed in the future years. What did I say? Which is arising in a particular year. In a particular year, it may be arising in the current year, or it might have already arisen in the last year. It already arisen in the current year. Okay, right. And it is capable of being reversed. It is capable of being reversed. Yeah, it is capable of being reversed. That is what I would like to say. What do you mean by that? I will take an example. Okay, right. And what about permanent difference, sir? Permanent difference means difference is arising. Okay, difference is arising, but it is not capable of, correct? But it is not capable of being reversed. Not capable of being reversed. Okay, it won't be reversed. It is like permanent. Once difference has come, that difference will continue lifelong. It will never be reversed. Okay, what do you mean by? Yeah, let us take a simple example. Agriculture income, I'll tell. Okay, agriculture income. Yeah, the agriculture income, what will happen as per the P&L? As per the P&L, what do you say? It is an income. We'll show it on the credit side. I mean, we'll take it as an income in the P&L. If you prepare a T, then we'll write on the credit side it's an income. Agriculture income is also income. But as per the tax, what do you say? Okay, current year. Okay, in the current year, I got agriculture income of 20 lakh rupees. I have taken it in my P&L. Agriculture income 20 lakh rupees. Correct. Right. Agriculture income as per the income tax, is it taxable? Not taxable. Okay, as per the income tax, will you take it in the current year? 0. Will you take at least in the next year? 0. That next year, life may anytime do you take it? No, we'll never take it. That means it is permanent. Is it getting reversed? Like, sir, 1 year I will take, sir, income tax will take in the next year, sir. Okay, fine. I took in the current year, they took in the next year. Or they took it first, later I took, sir. Something like that, something, right? End of the day, both are able to take it. Then it is timing difference. No, sir, only one side income, sir, they will take it, but I will never take it. Then it is permanent difference. Say example, one more thing. Let us say, suppose we gave donation. Yeah, assume we are getting 150% tax benefit. Yeah, how much is that benefit? 150% tax benefit. Yeah, how much is the donation you paid? Let us say 1 lakh rupees I gave a donation. Okay, as per the profit and loss, what do you say? My donation expenditure 1 lakh. That's it, you will take 1 lakh only. Okay, but what about the income tax? Income tax will say what? No, it is 1.5 lakh they will take. Because it is 150%, na? Correct. You are supposed to get 150% exemption or deduction, whatever it is. Correct, you got 1.5 lakh rupees of deduction. Right, but okay, fine, they took more money. But in the current year, yes, current year I gave donation. At least in the year 2, will I take the balance 50,000? No, I don't take it. because our accountancy, whatever you paid, I paid only 1 lakh, 1 lakh only will be taken. That means what is the difference? Difference of 0.5 lakhs is nothing but permanent in nature. One person has considered, I mean, income tax books may consider, accounting books may never, it is going to be considered to the extent of 50,000 rupees. Got it? Right. Suppose you paid some penalty. Yeah, it is disallowed under 37. Okay, 37(1), it is not other expenses, it is disallowed. But what do you say? But in the profit and loss, what do you say? Yes, a penalty is an expenditure. Yes, penalty is an expenditure. Income tax department allows, do not allow, what does it matter? It is an expenditure. I'll book it in the I'll book it in the profit and loss. But when it comes to income tax, do you allow this as an expenditure? No, zero. Do you allow it in the next year? No, we'll never allow it. That's all. It is only one sided, it is happening. Next side it is not happening. This is a permanent difference. If it is a permanent difference, we are not supposed to create any deferred tax for permanent differences. Hope you understood. Okay, let us spend some time on what is that timing difference. Okay, timing difference. Yeah, in IND AS we will call it as temporary difference also we call. Yeah, it is temporary. In the current year difference is coming, it is going to be rectified in the next year. That is what temporary we call. It is not like permanent. Doesn't matter, you use the word timing difference only. Okay, what is this here, sir? I will tell you. Let us say bonus, right? Do you know bonus? Yes. Yeah, do you know section 43B of the Income Tax Act? Yes. Suppose we made a provision for bonus. How much, sir? Let us say 10 lakh rupees you made a provision. Correct. As per the profit, correct. Let us say as per year 1 in the profit and loss, how much expenditure do you yes, 10 lakh rupees is an expenditure, will deduct it from the profit. Correct. But what about income tax? In year 1, it is a provision. Provision to it is disallowed. I mean, when you file the returns, suppose 30th September you are filing the returns. Before 30th September, if you had already paid, no issues. It is allowed. If it is not paid, then it is not allowed. That you know sections of income tax, you know much better than me. Correct. Na? Suppose it is paid in year 2, that is say December may pay kiya. When is it paid? December may they have paid it. That means here is how much? 0 is allowed. Even though 10 lakh rupees you have made a provision which is deducted from the profit before taxation already, but under the income tax, taxable income may they deducted 0 expenditure because it is not as per the Income Tax Act. Correct. But next year assume next year you have not deducted anything in the profit and loss. Okay, but they will allow this 10 lakh rupees in the next year. So whatever the difference is arising in the current year, it is getting rectified in the next year. Then this is called, what is it called? Timing difference. Okay, but one more best example is depreciation, I'll say. Yeah, depreciation. Yeah, basic concept you just understand. Let us say the cost of asset is equal to 30,000 rupees. I'll take it. Cost of asset how much? 30,000. Yeah, let us say life is equal to 3 years. Okay, we are following SLM method. Assume residual value is equal to 0 taken. This is all for the profit and loss purpose. Okay, as per the profit and loss, depreciation for first year, second year, third year. How much depreciation? 10,000, 10,000, 10,000 over. Correct. But assume, let us say tax purpose, in year 1 itself is equal to, they are providing 100%. They are allowing 100% you can depreciate it. If that is what done, tax purpose how much is it? 30,000 they did already. Full 30,000 whatever you spend is allowed as a depreciation. So next year 0, next year 0. Getting my point? Done. So now what is the difference is coming? There is a difference of 20,000 rupees. Correct. But difference of 20,000 rupees negative is going to be, now if you total positive here, at the end of the third year, net difference is equal to, just check, 0. Correct. Now see, end of the day, whether it is as per the profit and loss or whether it is as per the income tax, 30,000 is supposed to be depreciated. Maybe the amount of depreciation will vary from year to year. Correct. I may take it 3 years, they may take it 1 year, or I may take it 3 years, they may take it 5 years. Let that happen in their own fashion. But end of the day, throughout the life of the machine, it is supposed to be depreciated. It is supposed to be depreciated. 30,000 rupees is supposed to be depreciated. That's it. Timing is changing, but total amount of depreciation is not changing. Correct. Now, then this is also timing difference. Got it? Right. So now you understood what timing difference. If it is a timing difference, then we are supposed to create deferred tax asset or deferred tax liability. Correct, na? Right. Now, next basic question. Right, basic point. Some point is what? Let us say, I told you already. Suppose profit before tax is equal to 1 lakh rupees has come. Okay, my taxable income. Correct, na? My taxable income is equal to only 60,000 rupees coming. Got it. Why, sir? Why is the taxable income lower? Yeah, now I am telling this is because of some amount is timing difference. There is some number permanent difference. Okay. How much is this? Yeah, there is a difference of totally 40,000, but out of 40,000, timing difference is 30,000. Permanent difference is equal to 10,000. Okay. Now, first tell me, your taxable income is how much? 60,000. Correct, na? Right. See, actually, you are supposed to pay how much into 30% means 30,000 you should pay. But you are paying how much into 13% means 18,000 only you are paying. Correct, na? Are you paying less or are you paying more? We are paying less. You are paying less now means what? Are you supposed to pay in the future or not? Yes. You are supposed to pay in the future means you are liable to it. Correct, na? That means what? Deferred tax liability is going to arise. What is going to arise? Deferred tax liability is going to arise. On what number? On the timing difference only you are supposed to calculate. So into 30%, if I calculate, how much is it coming? 9,000 is coming. Fine. So what is that entry? Deferred tax expenditure account, debit to deferred tax liability, 9,000. You are supposed to record like that. Okay, sir, what about this into 30%? It is a permanent difference, I told. It is like agriculture income or something like that. Whatever it is, ignore it. Right, no deferred taxation. We are not going to create deferred taxation. Okay, in the profit and loss. Profit before tax. Profit before tax is equal to how much, my dear? 1 lakh. Yeah, then what do you record? We record a tax expenditure. Current tax means what I said, which is payable as per the Income Tax Act. Okay, that is equal to 18,000. Now, deferred tax expenditure is how much? Correct, na? This is deferred tax. Deferred tax is equal to 9,000. Yeah, 9,000. 18 plus 9 is equal to 27,000 rupees. This is my tax expenditure. Now you can tell, sir, 1 lakh into 27,000 divided by 1 lakh is equal to how much is taxed? 27%. Correct, 27% is correct. Why, sir? Means E 10,000 is never is going to be taxed. What did I say? E 10,000 never will be taxed. That's why we don't need to bother about that permanent difference. You should ensure up to 90,000 only you are supposed to ensure. Out of 1 lakh, 10,000 is permanent difference, na? So you should leave it aside. You should leave it aside. And how much is the number? 90,000. 90,000 into 30%. 27,000 is coming. That means we have taxed current year income correctly. That is what the basic point with respect to this. Okay, right. I gave just overall discussion basically. Yeah, we cannot take up each sum and solve it. It is difficult. Okay, yeah, you already must have done it. It's a revision basically for you. Okay, next point. Sir, you are saying deferred tax you are saying. Yeah, deferred tax is required for timing differences. Correct. But out of this, correct, deferred tax liability is one, deferred tax asset is another one. Correct. Sir, with respect to deferred tax liability, is there any condition? There is no condition. We can recognize any amount, no conditions, nothing, no conditions. Yeah, no conditions, nothing. You can recognize whatever the amount you are supposed to record, that much amount you can record it. Okay, yeah, this is like conservatism. We don't look at what is that. We don't see, can I recognize this amount? No, whatever is deferred tax liability, no need to discuss, no permission is required, directly record full amount of deferred tax liability. Okay, what about deferred tax assets? With respect to deferred tax asset, for recognition, it is an asset. Correct. When it is asset, no, basic prudence concept should be there. Yeah, because when I say deferred tax asset account debit, next will be deferred tax income only. That means income, are you recognizing or not? We are recognizing income. So that's why when you are recognizing income, you should be careful. Got it? You should be careful. Yeah, you should be careful. right? So what is that, sir? Deferred tax asset is arising, it is arising from which, sir? Arising from, yeah, it is arising from, one is what? One is business losses, yeah, one is business losses, and unabsorbed depreciation, unabsorbed depreciation, these two things, or others, any other reasons. Yeah, see, if it is any other reasons, na, deferred tax asset is coming because of other reasons. Other reasons means sometimes what do I can say? Preliminary expenses, I can give example. Preliminary expenses. What is in preliminary expenses, sir? Yeah, preliminary expenses, what happens, you know, as per the P&L, preliminary expenses charged to P&L immediately. I will charge to P&L immediately. We don't show as an asset. Yeah, this is charged immediately. Got it? Done. Right. But as per the income tax, it is allowed as for 5 years. Yeah, suppose you paid 50,000 rupees preliminary expenditure for incorporation. Yeah, that is incorporation expenditure. Okay, if 5 years, what do you say? 10,000, 10,000, 10,000, correct. So how much is the first year allowance? You are getting, I mean, deduction of only 10,000. That means your taxable income is more. Your taxable income is more means you will be paying more tax. You paid more tax means nothing but prepaid. Prepaid is nothing but deferred tax. That's it. Okay, if it is arising from any other reasons like this, okay, if it is arising from any other reasons other than business losses, other than the unabsorbed depreciation, what the standard says, is there a reasonable assurance? Kya bola? Reasonable assurance. Reasonable assurance, that's it. Reasonable assurance is sufficient. Okay, reasonable assurance that there will be taxable income in the future, taxable income in the future, taxable income in the future to set off this, right? Listen carefully. This point, if you understand correctly, next point will become easy for you. See, if there is a deferred tax asset is coming, okay, what is the journal entry will record, my dear? Deferred tax asset account debit to deferred tax income will record. Perfect. But e-asset will be useful to this is like prepaid. Yeah, maybe I am giving one example. It may not be exactly relevant, but somewhat you can link it. For understanding purpose, I am giving. Okay, for student level, that's it. See, basic thing. Suppose I am paying for my maintenance of AC, air condition. Okay, maintenance AC. Yeah, prepaid 3 years. Okay, 3 years or 5 years or whatever. 3 years. Okay, AC maintenance. How much you paid, sir? Let us say some 50,000 rupees I paid for AC maintenance. Okay, very good. Suppose next year, suppose today I paid already money. Okay, they already told me no refund concept. Kya bola? No refund means what? Tomorrow I removed this AC. I removed the AC. Or I shifted from Bangalore to Hyderabad, I shifted. Okay. When I shift from Bangalore to Hyderabad, then what will happen? Correct. AC is removed. Suppose this guy is only located here, not like Blue Star everywhere I can get it done. No, it's only located in Bangalore. Now what will he say? Is it useful to you? Whatever I paid, 40,000, first year only I got it done. Next 40,000 is there. If 40,000 is useless for me. Correct, na? Right. In the balance sheet, yeah, there is a prepaid, what is it? Prepaid AC maintenance 40,000 rupees is coming. Then what should I do in my balance sheet? Shall I keep it as prepaid? Is it useful? What is useful? You went to Hyderabad or Vizag somewhere. Correct, na? There, no use. This guy is not going to come and provide you services. There is no future economic benefits from this asset. Then that means I have to charge it to P&L. If you are here in Bangalore, then only that is useful. If you are not here, that means AC only not in Bangalore, then those guys will not come to Hyderabad and do servicing to you. Matter over. That means this is an asset, correct? Now, if I keep a deferred tax asset of 40,000 rupees, some other example, correct? Now, when this will be useful to you? When this will be useful? Tomorrow, if I get a taxable income, if I get taxable income, say example, taxable income of, let us say, 10 lakh rupees has come. Okay, out of that 30% means how much? 3 lakh. But out of 3 lakh, I will say, sir, I already paid 40,000 rupees. That's why I will pay now 2.6 lakh rupees. Now it is useful to you. Correct? When is it useful? When you get a taxable income in the future 10 lakh rupees, you're supposed to pay actually 3 lakh, but you don't pay 3 lakh, but out of 3 without paying full 3 lakh, you will say already prepaid 4 lakh 40,000 rupees, I will pay remaining 2 lakh 60,000. Then it makes sense. Correct. Suppose next year taxable income is equal to 0. You made losses. Got my point? You made what? Losses or whatever the reason. You couldn't get any taxable income. Now what is the use? You are paying first to 0 only. What is there to adjust? Nothing to adjust. Unless until you get some taxable income, then only you will be able to use that asset. If you are not expecting that, if you are not going to get any taxable income, then where is the point of creating? Why should I create deferred tax asset simply like that and charge it off in the next year? That's why standard very clearly says, "Arey, do you have an assurance, reasonable certainty?" Correct. Now what is that? Reasonable certainty, assurance, certainty, both are fine. Reasonable certainty that there will be future taxable income. Future taxable income must be there with which I will be able to set off. If you are expecting, okay, but remember here carefully, yeah, for this only projections are sufficient. Projection is sufficient. You don't need to prove it. Yeah, say you can say, sir, last year I got so much of profits, current year also I am going to get a profit. See, business is happening very good, that's why I'm expecting next year future income. Yeah. For forecasting, people call, correct na, forecasting, projection, all things are sufficient. You don't need to prove it. Yeah, don't need to prove it. Reasonable certainty, we don't need to prove it. Got it? Right. But listen carefully. But with respect to business loss, sir, business loss to be, there will be useful. Yeah. Suppose you got a business loss current year. Okay, current year business loss is equal to 10 lakh. How is this useful, sir? Yeah, suppose next year you got a profit, taxable income. Okay, now next year taxable income is equal to 30 lakh. What you generally supposed to do on 30 lakh into 30% means 9 lakh rupees you should have paid. But now what are you doing? No, sir, last year I made in the loss. So minus 10 lakh rupees, sir, that is equal to 20 lakh. 20 lakh into 30%, I will pay 6 lakh. Correct. That means on 10 lakh into 30%, which is equal to 3 lakh. 3 lakh is nothing but the difference between 9 lakh and 6 lakh. Hope you understood. Correct. Na? So E 10 lakh is going to be, useful. When is this going to be useful? When you get again this, here also you should get the taxable income or not. Correct. But the question is what here? Na? Suppose your company had a track record. What is the track record? Last 10 years, sir, full losses, sir. No positive, sir. Suppose example. Now if you tell, no, next year my company will make super profits. And if you tell, are we fools to listen? Obviously. That's why what do we say? Correct. Now with respect to business loss, you have got business loss. You couldn't absorb the depreciation. That means you do not have that much of income to absorb your depreciation itself. Then what do we say? We say very simply, correct. Now you can create only when there is a proof. That is what they say. Create deferred tax. Create deferred tax asset only when there is virtual certainty supported with convincing evidence. Yeah, virtual certainty supported with convincing evidence. I need evidence. Virtual certainty, right? Virtual certainty supported with convincing evidence. If you give me the convincing evidence is a matter of proof, correct? Now it is a matter of fact. You show me, correct? Now how can I show you, sir? How can you say tomorrow, next year taxable profits will come? See, sir, I have a binding agreement. I already entered with the one customer. That guy has to purchase goods from me. I have to sell goods to him. Correct? Na? My selling price is equal to 100 rupees, sir. My cost is equal to actually 60 rupees. See, per product, per unit, I am making a profit of 40. As per this, okay, he has to buy 10 lakh products. 10 lakh into 40 means 4 crore rupees. I am getting a profit in the next few years. As per this agreement. Oh, super, yaar, 4 crore rupees you are making profit. That means pakka taxable income is going to be there. Correct. So what is the current year business loss you got, sir? I got business loss of only 10 crore rupees, sir. Okay, I got business loss of how much? 10 crore. But what is the proof is available for how much? 4 crores. You have proof to the extent of 4 crores. Na? Only to the extent of 4 crores deferred tax asset should be created. Because proof is only to that extent. Yeah, that's why what do we say here? This only to the extent. Only to the extent. Only to the extent it is available. Only to the extent it is available. Which is available? Virtual certainty supported with convincing evidence should be there. Sir, but what about the remaining, sir? Okay, remaining you don't need to be worried. See, so current year, what do we say? We create deferred tax asset for 4 crore rupees. 4 crore into 30%, something will do. Calculate it. But remaining 6 crores, sir? Fine, yaar. Current year to nahi kar sakta. Suppose next year. Next year you got one more contract. Yeah, got it. Next year you got one more contract. Sir, one more contract, 3 crore rupees profit I am getting, sir. Next year to the extent of 3 crore into 30% deferred tax asset, you create it, no problem. Got it? Yes, it is always like that. Suppose sir, third year kuch nahi aaya, sir. No, they don't create anything. Yeah, next fourth year I am getting another correct. Next 3 crore rupees ka profit I am getting. Fine. Whenever you get that year only, you are supposed to create deferred tax asset. Next, one more point. In the current year, you do not have virtual certainty, and that's why you could not create deferred tax asset. Does not mean that you lost it fully. Current year you could not create because you do not have virtual certainty, and you could not create deferred tax asset. Does not mean that you lost it fully. Whenever, correct. Now see, as you know, business losses, how long you can carry forward, my dear? 8 years. And what about this? This is like infinity. N number of years you can, how long your business is there, that long business, what is that? Unabsorbed depreciation can be carried forward. Correct. Now, within 8 years, if you are able to get virtual certainty with convincing evidence, in which year you got that certainty, that year you can create deferred tax asset. But you do not have any proof saying that I'm going to get taxable profits in the future, then simply by projections, simply by forecasting, we are sorry, we are not allowed to create deferred tax asset. Okay, hope you understood. Yeah. Next, sir, which rate I should take it? I told you, which rate means that is what is that? Enacted tax rate. Enacted tax rate. Enacted means what is the tax rate governed, correct? Na? Enacted tax rate. What is the right now tax rate applicable for the current year? Correct. Na? See, 2019-20 financial year. For this financial year, sir, for my company, 25% is applicable. 25% plus some education cess and etc. is applicable to me. Then you take 25%. For some companies, sir, they are not coming under some rules and regulations are there. Correct? Now you know that I will not teach right now. Right. So 30%, we are into 30% bracket. 30% tax rate, you take it. Correct? Now what is applicable to you for this financial year? What is the tax rate? It is already enacted in India. Though correct, in February month only parliament session we are going to enact it. Then fine, 30%, yes, you can do it. What is applicable tax rate to you, that taxable rate you are supposed to apply. Got it? Right. Next point. Okay, next point. This point I don't expect that they will ask you in the examination, but still I would like to discuss that. Okay, what is that, sir? Exactly. Look at this, my dear. Yeah, this is tax holiday. Yeah, this is a small point only, not very big point. Tax holiday, 80IA, IB, 10A, 10B, something like those sections which are applicable for as per income. Tax holiday, if you whatever section number, forget. Okay, tax holiday, if it is there, what is the point? Yeah, first point, what is the tax holiday? Tax holiday means you not liable to pay any tax. Not liable to pay tax. You are not liable to pay any tax. That is tax holiday. During that period. During that period, you are not liable to pay any tax. Even though if you get taxable income also, you don't need to liable to pay. Right. The point here, suppose my tax holiday is equal to 10 years. Instead of 10 years, now I'll take simple example, 5 years I'll take it. Example. Okay, if the tax holiday period is 5 years, say 1, 2, 3, 4, 5. Okay. Yeah, now timing difference, TD stands for timing difference. Timing difference first year, sir, maybe because of depreciation, because of so many things, it may come up. First year, sir, 3 lakh rupees timing difference is there. Okay. Next year also 4 lakh timing difference is created. Okay, done, sir. Next, what is happening? Reversal, reversal, reversal. Next, -1. It's going on like this. Okay, right. Whatever till now, totally how much is created actually? 3 plus 4, 7 lakh. 7 lakh may, right. Next, -1, -1. Then over. Like this, it is getting reversed. Now, what the standard? Now, standard is telling very clearly that the timing difference which is arising in the tax holiday period and which is getting reversed within the tax holiday period. What did I say? Which is arising in the tax holiday period and which is getting reversed within the tax holiday period do not create deferred tax. That is what they are telling. What did I say? Arising and getting reversed. Arising and getting reversed within tax holiday period. Right? No deferred tax. Don't create any deferred tax. But ulta, arising in the tax holiday period but getting reversed subsequently after tax holiday period, you have to create deferred tax. As usual, you have to create. Now look at this. I'll make it one thing, small thing. Okay. I'll make this as 4 lakh. Okay. This also 4 lakh. I'll say this is equal to 2 lakh getting reversed. Doesn't matter. Now just small corrections. This is 4, this is 2. Right. First see, if 4 lakh rupees, what is this? Yeah, here, see, observe carefully. If 4 lakh rupees arising in the current year. Correct. When is it getting reversed? First in, first out. Okay, first in, first out, which is arising first is getting reversed first. Out of this 4 only, you should say -1 is gone, -1 is gone, -1 is gone. Okay, that means E3 is arising within the tax holiday period and 3 is getting reversed. But out of 3, correct? Na? So that means still how much is there? 1. E1 is getting reversed when it is getting reversed in the 6th year. That is after tax holiday period. Okay, then what about 4? 4 is not, nothing is getting reversed during this because first it is reversed, na? Right? E4 is getting reversed after tax holiday period. So then 4 you have to create. Assume it is a deferred tax liability. Then I will say into 30%. So 30,000 rupees I should create deferred tax liability immediately in the first year. Okay. Next year also 30%. So 1.2 lakhs you are supposed to make deferred tax liability. Right. But E 30,000, E 1 lakh 2,000, when is it getting reversed? Next year. I mean 6, 7, 8, 9 years only it is getting reversed. Correct? Na? So now what are we supposed to do? We record 30,000 journal entry, 1,20,000 journal entry, here nothing, nothing, because it is not getting reversed. Na? Yeah, through the extent of 1 lakh, E1 lakh, E1 lakh, I did not make only anything. So then where is the reversal? If you make for something, then you will be reversing for that thing. If you are not making only, then where is the point of reversing? Got it? Right. So next again, yes, here onwards you will be reversing. That is how deferred tax on tax holiday period arises. I repeat the sentence once again. If the timing difference is arising within the tax holiday period and it is getting reversed within the tax holiday period, do not create any deferred tax. Okay, right. But if it is arising within the tax holiday period, getting reversed after tax holiday period, it is arising now, na? Yeah, create for that one. You create for that one. Again, rules of deferred tax asset will remain always same. Will be creating deferred tax asset only when there is a reasonable certainty or virtual certainty depending upon the situation. Got it? Right. And one more last point I would like to explain, because this was asked in the previous examination. Okay, 2 times already they asked. This is related to MAT. What is this MAT? Minimum alternative tax. Yeah, you are not studying this in the income tax, but yes, you are supposed to read this because they asked recently also one question on this. Okay, minimum alternative tax is what? Yeah, let's see what the income tax department does. Okay, I hope you must have studied it. First, taxable profit they will check. Taxable profits. As a taxable profits is equal to 1 lakh. Okay, 1 lakh, what is the tax rate? Let us say 30% is tax rate. Yeah, tax rate is equal to 30%. Correct. They created one more word called book profits. Yeah, what is book profits, sir? Book profits is nothing but profit before tax plus or minus something, few items, some 5-6 items are there. Will be making adjustment to your profit before tax. That's all. Whatever comes is book profit. Got it? Done. Suppose book profit is equal to 2 lakh rupees. Say this is 18%, 17%. I don't remember exact rate. Doesn't matter. 18%. Now they will check. What do they check? Which is higher? Yeah, which is higher means what is the tax liability as per this? As per this is equal to how much? 30,000. This is equal to how much? 36,000 rupees. Whichever is higher only you are supposed to pay now. Normal tax, regular taxation is how much? 30,000. This book profits, over the book profits, what you calculate is called MAT. Okay, minimum alternative tax. How much is your liability under MAT? 36,000. Then you are supposed to pay 36. Suppose this has come to 28,000. Then they will say no, you pay regular tax. This is regular. This is MAT. This is regular. This is MAT. Are you getting my point? One is regular taxation, another one is MAT tax. Correct. Yeah, this is current year. Yes, current year you are under the MAT because 36,000 is bigger. Correct. But next year you may not be in MAT. You may be on regular tax. Because next year it will change every year to year. It is going to be changed. You don't know unless until you close the current financial year, and then only if you sit and calculate. Not till that date you do not know what is going to. You will be falling under regular tax rules or as per the MAT rules. That is the issue. Now what the standard is saying, right? What is the standard is saying? Even though MAT is applicable for my company, now the question will come, sir, deferred tax I have to calculate. You are telling 30%. Now here 2 percentages are there, na sir. Whether I should calculate deferred tax asset as per 30% or 18%. Yeah, I am telling you very clearly, MAT rate should not be taken at all. Only 30% only you should be taking always. Got it? How much you should take? 30% you should take it. Done. Now the question. Yeah, let us say. See, this is book profits I said. This is book profits I said. Now fine sir. How to calculate, sir? Basic thing, very, very, very simple thing. When MAT question has come, first assume MAT is not applicable to this company and calculate deferred tax asset. What did I say? MAT is not applicable to this company and calculate deferred tax asset. Then that's all, your job is over. Let me check whether I have it directly. If I have, one question, let me, because this was asked in, don't remember. Give me a little time. Yeah, look at this question, concept capsule 14. It was asked in 2019. Obviously, that was the last attempt. Yeah, but good one. That's why I just thought of looking at it. See, accounting profit as per P&L is 6 lakh. Okay. Book profit as per book profits I told you. Accounting PBT plus or minus they will do something, then they will calculate. Book profits 3,50,000. Profit as per Income Tax Act is equal to 30, right? 1,000. Okay, done. Let me do it. 6 lakh rupees is accounting profit. That is profit before tax. Okay, as per the MAT, that is book profit is equal to, let me calculate, book profit is equal to 3,50,000. This is equal to 3,50,000. This is equal to taxable is equal to 60,000 rupees. They calculate, they set. Okay, MAT rate is how much I gave? 7.5. Okay, MAT rate is equal to 7.5. This is equal to 20% we give. This is information sufficient. Now you are supposed to calculate deferred tax here. I told you, first what you should do, assume there is no MAT. Okay, for the time being, what do I say? I'll just put a shade. This I forget. There is no MAT. then I'll calculate deferred taxation. I should calculate. Sir, how? See, now what is the tax you are supposed to pay as per Income Tax Act? 60,000 into 20%, I should pay 20,000. Correct. But how much is your taxable profit? I mean, actually, income P&L profit is 6 lakh. So 6 lakh into 20% means I should have actually paid 1,20,000, but I am paying only 12,000. Correct, na? Right. Means you're paying less money. You're paying less money means what? You're liable to it. You're liable to means what is the difference? Difference is how much? 120 minus 12 is equal to 108. 108,000 rupees you have to create deferred tax expense account debit to deferred tax liability, that is equal to 108,000. 108,000 deferred taxation, you made it now. Over. Now what about the MAT, sir? Now once you calculate deferred tax expenditure, then you also calculate MAT. But really, do you pay 12,000? No, department will not agree. Right, see, you have to calculate deferred tax. Deferred tax is equal to 108,000 over. Now what about current tax, sir? Current tax means what is payable as per Income Tax Act. Correct. What is payable? Is it 12,000? No. Now for the purpose of current tax, now you should look at the MAT. What is MAT here? 3,50,000. So 3,50,000 into 7.5%. I will pay 26,250, sir. This is my current tax. That's it. 26,250 plus 108, that comes to 134,250 rupees will come your total tax expenditure in the current year. That's it. If you look at, yeah, 1,34,000. Can you see here? 1,34,250 is what the number you are supposed to do it. Got it, my dear? Right, that's it. I would like to close this discussion of what? Accounting Standard 20. We discussed almost 1 hour on this. Okay, but in the class I will take 4 hours. But yes, this is revision class. This is more than sufficient, my dear. Okay. Yeah, let us look at now Accounting Standard 9. Okay, now first I will do Accounting Standard 9. Yeah, Accounting Standard 9 and Accounting Standard 7. I will complete it. Okay, later only we'll go to Standard 26, Standard 20. Okay, right, Accounting Standard 18. These standards, leftover standards, will obviously focus. Yeah, fine. So Accounting Standard, see, these both the standards are actually related to revenue standards. Yeah, this is Accounting Standard 7 is what? Construction contracts. That is nothing but actually, even the heading, it is not like revenue, but it is nothing but revenue. Okay, this is nothing but revenue from construction contracts. Yeah, in heading you don't find these words, correct, na? Right, but it is nothing but revenue from construction contracts. Yeah, and what about this? This is revenue recognition. This is revenue recognition. Yeah, what is this? This is others. Others means other than construction contract, all kinds of income. Sales basically will be coming under Accounting Standard 9. Okay, we have a separate standard for construction contracts, but all other kinds of revenue will be falling under Accounting Standard 9. Okay, fine. Accounting Standard 9, let us focus. That is revenue recognition. Okay, revenue recognition. Okay, done. Yeah, recognition means what? I already told you. Recognition means recording. Recording in the books. Recording in the books of account. Correct. Yeah, what we'll talk about here, when to record, that's all. Only when to record we'll talk about. Yeah, sir, how much, sir? How much to record, sir? How much to record? The standard won't tell what to record at fair value, at book value, nothing it will tell. Yeah, what the standard says, this is as per the agreement, yeah, correct, na? Yeah, seller buyer agreement will be there, na? How much they are selling, how much they are buying, at what rate they are buying, that is the same rate you are supposed to record it. So what are we talking about here? When to record means basically timing of recording the revenue. What is revenue means? Revenue means, see, revenue is nothing but sales. That's it. Correct. Okay. And but it is not like, is it like income, sir? There is one more definition called income. Right. What is it called? Income. Okay. Right. This income definition, income definition is very broad. Yeah, I will explain. Anyhow, I told you already. Income is very simple. It says increase in assets or future economic benefits, anything they will use the word, or decrease in liabilities. Yeah, decrease in liabilities, and ultimately increase in equity. Other than contribution by equity holders, contribution by owners or equity participants, something is written. This is what the definition of income definition I am telling. Increase in asset or decrease in liability, ultimately there is an increase in equity other than contribution by. Yeah, this income includes what? This income includes realized income, unrealized income, all types of realized and unrealized income. Yeah, realized income, unrealized income, all kinds of income are part of this. Got it? All types of income are part of it. Now the question is, right, even though all types of income are part of it, my dear friend, but we are not going to deal. We're not, right, say example, we sold fixed asset for profit. Yeah, we sold fixed asset for profit. Is it income? Yes, it is income. But is it revenue? No, it is not sales. Right, we sold investment. Yeah, investment for profit. Is it income? Yes, it is income. But is it revenue? No, it is not revenue. Yeah, say example, we have got forex fluctuation gain is there. Is it income? Yes, it is income. But is it revenue? No, it is not revenue. Got my point? Yeah, we got some discount. Okay, we got some discount on settlement of discount on loan settlement. Yeah, loan I am supposed to pay actually 10 lakh rupees. I bargained and I paid only 9.8 lakh rupees को settle कर दिया मैं. Means 20,000 rupees, is it a gain or not? Yes. Is it income? Yes, it is income. But is it revenue? No, it is not revenue. Government grant, can it be income? Yes, it can be income, revenue approach, but it is not. So income, there are so many types of incomes are there, but all incomes are not part of revenue. Okay, those have separate standards like fixed assets. Accounting standard 10 refer karo. Right, if it is investment, accounting standard 13 you are supposed to refer. If it is foreign exchange fluctuation gain, accounting standard 11 you should refer. If it is discount, there is no standard for this, the general principles of accounting, and government grant, accounting standard 12 you are supposed to refer it. Okay, right. Revenue, whatever I am telling, okay, revenue, this revenue, actually we don't discuss all kinds of income, all kinds of revenue. This standard has a limited scope. Observe. Okay, what it says? Revenue from sale of goods. Revenue from sale of goods. That is first one. And next one is sale or providing services. I'll write sale of services. Okay, right, sale of services. Next it says other income. The standard discuss about only these three things. Okay. Sir, with respect to other income also, is it like every other income, sir? No, it is not every other income. Yeah, here it discuss about interest income. Okay, right, dividend income. Yeah, next royalty income. Only other income also limited. Rental income, sir. Rental income is other income, but it is not part of here. You have to refer accounting standard 19 for leases. Is it from lease, contractual, cancelable, non-cancelable? You are supposed to look at those standards. Okay, next for your information, my dear, accounting standard 19 I have already shared in my YouTube channel. Okay, if you refer like Ravi Kanth, Miriyala. Okay, Ravi Kanth, Miriyala. If you refer my YouTube channel, I already shared accounting standard 19. That is full-fledged discussion. Yeah, I think almost maybe 4 hours discussion, full-fledged I have discussed, full-fledged, because many students generally, they'll face problem with accounting standard 90. Okay, in-depth discussion has happened. You refer my YouTube channel, you will find those files. Those videos are already there. Will be very much useful. It is in, I think, like I must have made it in like 1, 2, 3 parts, part 1, part 2, part something like that it is given. Got it? Right, my dear. Chalo, first let us spend some time right here. If for recognizing all these totally 5 types, like this, if I say 1, 2, 3, 4 and 5. Okay, for out of these all 5, for everything recognition, there are 2 conditions are there. To recognize sale of goods also, two conditions you have to satisfy. Both the conditions you have to satisfy. Condition number 1, condition number 2. Even here also condition number 1, condition number 1, condition number 2. 1, 2. The good thing, second condition is same. Second condition is same for all 5. Okay, here also same. That means if you discuss one time second condition, that is more than sufficient. It is same. And so what are we supposed to discuss? We have to discuss the first condition in all of these items. We have to discuss first condition for all of these items. Once you discuss first condition, it's more than sufficient. Okay, perfect. Now let us start with the first topic, that is sale of goods. Yeah, when can I recognize the sale of goods? Income from. When can I recognize sales? When can I say sale is done? Okay, I am selling this bottle to you. Okay, when do I say my sale is completed? Correct. Now, when do I say sale is completed? When the actually speaking, we'll say when the control is transferred to you. Correct. Now, control is transferred means from this minute onwards, whatever happens to the bottle, you should be bearing the risk. That's it. Correct. Now, you will be able to use it. Without your permission, nobody can touch this bottle. Correct. Now, with your permission only, everything will happen. That means you have the control over the bottle. I'm the seller, you are the buyer. When I transfer the control, I can say. Other way words, what we'll say, when can you recognize sale is complete? Only when risks and rewards related to that goods are transferred to the buyer. Okay, what do I say? Sale is complete. Sale is complete only when risks and rewards, R and R, I'll say, I mean risks and rewards. Risks and rewards related to goods are transferred to buyer. Risks and rewards related to goods are transferred to buyer. If you have transferred it to buyer, then my sale is complete. Okay. The risks and rewards means from that minute onwards, whatever happens to that goods, that the buyer is responsible. Yes. So still no, it is still I am the seller is only responsible, sir. That means goods, risks and rewards are not yet been transferred. Okay. Generally what happens, generally risks and rewards are transferred along with the goods. Yeah, along with the goods. Generally, yes, most of the circumstances along with the goods it will transfer. But it is generally, but not always. That means what do you mean by this, sir? Yeah, I mean generally correct, along with the goods. But sometimes, yes, sometimes what happens, risks and rewards may be transferred first. Okay, goods may be next. Yeah. Next, sometime what will happen, goods will be transferred first, risks and rewards will be next. Yeah, for this best example, sale on approval basis. Correct. Now, what is sale on approval basis? First we will give the goods. We'll give 1 week time. Sometime. Correct. Now, customer will agree. Customer will say, yeah, I liked it, I will take it. Then sale is over. If customer says, no, I did not like it. Then when customer says, I did not like it, that's it. That sale is not over. First goods went. Subsequently, on acceptance from the customer, then risks and rewards are over. Got my point? Right, that is the sale on approval basis. Sale on approval, correct? Na? You know that. Sale on approval basis means goods will go first, risks and rewards. Sale will be completed only on approval of the customers, not early. Okay, next word I say, first goods will go, okay, risks and rewards, okay, first goods will go, but maybe the risks and rewards will transfer little later. That is not regular transaction. Okay, not regular transaction. That is little rare circumstance actually. Okay, right. Now the question is one more circumstance, one more example I'll give you. This is regarding with respect to this also they ask us some 1 or 2 questions asked actually. That's why I wanted to cover. Okay, what is that? Hold and bill. Hold and bill. That is what one. Okay, invoice and bill and hold or something. Hold and bill, anything doesn't matter. What is this hold and bill, sir? Yeah, goods will be with me, ma. Goods will be with me. Yeah, goods will be with the supplier. Okay, goods will be with the supplier. I'm the supplier. I have the goods. Okay, actually you ordered me goods. You said like, sir, you send me, okay, 1 lakh goods you please send me. 1 lakh number of units. 1 lakh units you please send it to me in the month of March, you told. Okay, March 31st you send me, you told. Perfect. But actually on 28th March itself you called me. 28th March you requested me. What is happening? You are requesting, sir, there is some problem at our site, at our place. So I will not be able to accept your goods. So in the month of April, I will call you. That time you please send me. Okay, right. Now actually what is happening here? Try to understand. Are the goods ready? Ready. Is it ready to dispatch? Yes, ready to dispatch. Yes. Now the question, can I already goods are ready, but is it control is transferred? No, not transferred. Right. Now, can I recognize the sales here? You can recognize subject to the following condition. Okay, first thing. Yeah, see, there should be, why is that request is happening? First, what is the request from? First, you should get the request. Request from whom? Request from buyer. Yeah, it is not like everything whatever I'll make and I'll keep it in my go down and I'll say I'll record the sales. No. There must be a written request, a reasonable logic, some reasonable request from the buyer. Yes, sir. He requested me. Second one, what I say, goods are identified. Goods are identified. Identified means, okay, this bottle is related to that customer. Okay, then very clearly, this is related to them. This is not related to them. I know very clearly. Goods are ready to dispatch. Okay, goods are ready to dispatch. Everything is ready. Correct. Now, once he says yes, send means I will just put it in lorry and I'll send it. Next, third one. This is very crucial. Me, the supplier, I will not be able to redirect the goods to anybody. Not able to redirect. Not able to redirect. That means what? Not able to redirect means, yeah, for your case, 1 lakh goods already packed. Okay, good. One more customer. Yeah, it is packed for Mr. A customer. Suppose now B customer came. When did he come? Let us say 29th he came. Okay, 29th he came. He's also asking exactly 1 lakh goods I want, sir. B is asking. Now, correct. Now the question, supplier, can I, if the supplier can say, yeah, B, you take this 1 lakh, I will pack another goods for Mr. A. If he says, means what? Control is still with the supplier. Got it? Suppose if he says, no, these goods I cannot touch, my dear, this is related to A, it is not allowed for me, I cannot send it to anybody. It is meant for A, it has to go to Mr. A, that's it. Under that, sir, that is what, if you are not able to redirect the goods to another customer, then sale is complete. Yes, sale is complete even though goods are lying with us. That's why first risks and rewards have gone. Okay, goods have followed later. First risks and rewards, sale is completed, goods have, that's what I told you here. Yeah, first risk and rewards will be going first. Yes, in this example, what is happening? Risk and rewards are going first, later it is different. Got it? Next, suppose it says, sir, installation. Suppose, yeah, one TV purchase example. Otherwise, one example is one TV. Next is, what do I say? One lift you are purchasing. Yeah, with respect to lift, installation is very big process. Installation is not a small. Installation of lift is a major job. It is not like TV installation. What is TV installation? 2 screws they will fix and correct. Now just fit the TV, give the power connection, switch on. That's all. Installation is over, isn't it? Correct. But lift installation isn't like that. No, it will take months together to install it lift perfectly. Correct. Suppose you are a lift seller. When can you say lift is sold? Installation is major. So only after the installation is completed, when customer says, yeah, everything is perfect, that day only you can say, I sold lift to other party. Just shifting the, what is that, lift material to the site of the customer. Now you cannot say lift is sold perfectly. Correct? Right. What about TV? In case of TV, installation is not major. It is not major. Even though we told him our person will come and install the TV at your home, I told you, but still I am not doing it. Yeah, whether I do it, I do not do it, doesn't matter, because this installation is nothing. Even if I don't send my person, they will get it done on their own. That's it. Correct? It is not a big major thing. Nothing is there major. That's why, my dear, here it is not major. It is not major when goods is, when TV is sold. Correct? When TV is sold, that day only I can book that sales, even though installation is not completed. But this is not same with respect to, this is not same with respect to whom? With respect to what do you call? Lift. Yeah. So situation to situation. This is revenue. Every company will have different types of income. Every company will have different types of income, so one has to look at whether really risks and rewards have been transferred. If risks and rewards related to the goods have been transferred, then only sale is complete. Otherwise, sale is not complete. Okay, right. So fine. Next point. What is the second condition? I am explaining second condition right now. Okay, right. Second condition. Right. Second condition. Yeah. There is no uncertainty. There is no uncertainty. There is no uncertainty on ultimate collection. On ultimate collection. There is no uncertainty on ultimate collection. There is no uncertainty on ultimate collection. There is no uncertainty. I mean clarity. Uncertainty means what? Doubt. Doubt. On ultimate collection. Correct. I sold today to some party. Yeah. Do you have doubt? Right. Which days are? Which day? On the date of transaction. On the date of transaction. Yeah. Which day transaction is happening? That day do you have a doubt? No sir, I don't have a doubt. Money pakka aayega. If you are expecting that money is going to come, there is no doubt, then record it. Okay, sometime what happens, Guru? I must have said like 10 lakh sales are happened. 10 lakh worth of goods, risks and rewards have been transferred to my customer. Okay, done. But I have given him, correct, now suppose 2 lakh worth of goods I am expecting him as a return. Very clearly it is expected as a return. How do you know? I am doing this business for so many years. I know very clearly 2 lakh worth of goods pakka will come back. That means money is not going to come back. Then do not book the sales. Then what are you supposed to do? You are supposed to book the sale for 8 lakh rupees. Very much expected at the day of sale, because I have given an option to him, you return the goods. When it is very clearly expected, then you are supposed to book 8 lakh rupees only, because there is this uncertainty with respect to 2 lakh rupees of collection. Got it? That's why we are supposed to recognize only to the extent of uncertainty. Okay, next, suppose sir, while first on the date of transaction, DOTL record, on the date of transaction there is no uncertainty. Yeah, there is no, I don't have any doubt, but subsequently doubt is there, sir. For subsequently doubt came. Okay, doubt arising, subsequently doubt is arising, then what am I supposed to do? On the date of transaction, no doubt, but subsequently doubt has come whether this guy will pay. This guy has become, what is that? Insolvent, correct, something like that. Then you have to make a provision for doubtful debts. I mean to say allowance for doubtful debts, as we are correct, na? I mean, you know very much provision for doubtful debts. That's why this is correct word I told you in accounting standard 29. Allowance for doubtful debts. Allowance for doubtful debts you are supposed to make it. Remember carefully. On the date of transaction there is no doubt, but subsequently we got doubt, because by looking at his credit worthiness and financial position, we got a doubt. Then it is nothing but a provision for doubtful debts or allowance for doubtful debts. You are not going to, do not reverse, do not deduct. Okay, do not deduct from sales. Yeah, you are not supposed to deduct it from the sales. This is deducted 10 lakh minus 2 lakh, but with respect to this you shouldn't deduct from the sales. This is sale of goods related, a small discussion. Okay, now next point is what? Sale of services. Okay, sale of services. Yeah, with respect to sale of services, my dear, generally when do you recognize the sale of services? What I say, when service is complete. When service is completed. Yeah, when service is completed. I am suppose I took money. Hare, you pay me 2000 rupees. I will teach you accounting standards fully. You paid me money. Yeah, today only you paid. Assume 1 month, 15 days or 20 days, I will teach you. Okay, fine. 2000 rupees I am charging you for accounting standards. Very nice. Now what is that? In my books I received money today. Okay, 1st January I received amount. Yeah, 1st January, from 1st January I will start the class also. I received amount. What is the journal entry I should record? Can I say it is sales? No, what should I record? Cash account debit 2000 rupees to advance from customer. It is like advance from customer. Have I served you? No, I have not yet served. I have to serve you for 15 days. It is not happening on 1st January. Okay, sir, 15th January I have completed. Yeah, 15th January I completed my services. I taught you 15 days. I taught all accounting standards properly. Okay, all done. That day what are you supposed to record? Then that day advance from customer. Advance from customer account debit to, now today you should say sales, because my service is completed. Correct na? Service is completed, that's why I should do it. Got it? Right. But in this situation, example, okay, yeah, this is situation in the financial year, that is 31st March. This side 15 days I have to teach, this side 15 days I am supposed to teach. Correct na? But today only I received advance of 2000 rupees. Yeah, let me continue with this. Now what is that? Suppose 2000 rupees you have paid, okay, wherein I have to teach 30 days class. Out of this 30 days class, 15 days are coming into this, I mean 2019-20, and say 2021 another 15 days class. Then what are we supposed to do? Yeah, it is at least 15 days work is happening here, 15 days work is happening. Correct na? Can I say like 15 days means 50% of the job is done this side and 50% of the job is done that side. Can we divide it or not? Yes, it is obviously we can divide it. At least, if not by the days, at least we can discuss about number of hours. Let us say, sir, you are going to teach 60 number of hours. I am going to explain the subject. Say if I say 20 hours I am teaching here and 40 hours I am teaching this side, then at least in the proportion of 20 is to 40 you are supposed to account for. Correct. So when we receive 2000 rupees from you, what are we supposed to record? We'll say cash account debit to advance from customer. We'll say 2000 rupees. Say 15th of March we received it. 2000 I'll record it. Done. Next what will happen on 31st March? On 31st March, what am I supposed to say? Advance account debit. Assume 50:50 ratio, we have completed the job. Then I'll say 1000 rupees I will transfer it to sales account. Yeah, 1000 rupees has been transferred to sales. It's like that. Got it? Right. So that's why what do we say? Service is completed, correct? How do you say service is completed? Yeah, this here actually there is a subtopic. What is the subtopic? The services can be of divisible service and indivisible service. Divisible and indivisible. Indivisible. If it is indivisible, what do you mean by indivisible, sir? Indivisible means generally it is only one activity. Yeah, it is only one activity. I mean, it is not, you can't divide into parts. Like say number of hours basis I'll divide, like 20 hours of class, 40 hours of class. No, you can't divide. It is only one job. I ask you to do it, finish it and take your money. Got it? Example. Correct na? Example, what is that? You also have to think little. Suppose I will ask, I am a customer to you. I will ask you, Ray, you come and file my income tax return. Income tax return, you file it. Fine. I will pay you 5000 rupees. 5000 rupees customer has to pay me. Okay, done. Right. Suppose on 31st March, I did, suppose 80% of the work is done. Okay, but you have not filed the income tax return. Got it? But you completed the balance 20% in the next year and you finished it and you got an acknowledgement from the department. Yes, income tax return is filed. Tell me now, when should I recognize the income? 5000 rupees, can I say? Can I say in the, 2019-20 financial year or 2020-21 financial year? Basic question, Amma. Even though 80% of work is done, just think over it. On 31st March, can I say debtor account debit 80% means 4000. Debtor account debit 4000 rupees. If I say debtor account debit 4000 means, do I have right to ask him, pay me 4000 rupees, I did 80% job? What customer will tell? Whether you do 80% or 90%, get me acknowledgement, then I will pay you 5000 rupees. I will get the right to receive 5000 rupees only when you complete it, not percentage basis. That's why that indivisible, now I cannot say this is divisible. This is all one activity. Whether you do already all the data is filled, that, this and all, it's not at all considered by the customer. You do not have right to receive the money on 31st March. You cannot say debtor account debit. Debtor account debit means what? Receivable from the debtor. You do not have the right to receive. That's why this is only when, correct na, this is only when substantial portion of work is completed. Substantial portion of work is completed. Yeah, when you complete substantial portion of work, my dear, that day only you can say. Substantial portion of work means what? I already filed the return. Nothing much is pending. Suppose say e-verification is pending. Yeah, you may be knowing it in the future. Okay, when you are filing income tax return, That is e-verification is hardly like they will get one OTP, I have to file it, that's it. I have to just type the OTP, then work is over. But already filed it, I have completed the filing, then fine, you have the right. Till the time you complete the job substantially, yes, everything is completed, that day you can say it is receivable. So that means with respect to ITR on 31st March, I cannot recognize revenue. It will be, suppose if you had already paid you money also, then it will be an advance from customer 5,000 rupees. In the next year only, that is in 2020 2021 only, you can recognize advance account debit to sales. It is like that. See, it depends on situation to situations and circumstance, supposed to understand actually. We can't say now, we can't discuss like in this case you have to do like this. No, it is revenue standard is very difficult standard, practically difficult standard. In examination it is not that difficult, but practically yes, it is okay, right. Divisible. Divisible means just now I told you classes, correct na? Classes generally it is right. Activities are more than, correct na? Activities are more than one. It is not one activity, it is more than one activity, and we can actually divide it based on the number of hours work and some percentage. It makes a sense. Suppose some painting job, we are supposed to do it, right? We did one floor. Can I ask the customer, hey, I did already one floor, so much square feet of work I have completed, pay me my money? Do I have right to ask him or not, even though I have not completed the 100% painting? Since I did already 40% of job, correct now, can I ask or not? Yes, you can ask him. That's why if it is divisible na, then recognize revenue, then you have to recognize revenue on percentage completion basis. Percentage of completion basis. You have to recognize the revenue on percentage of completion basis. Okay, yeah, how much percentage work is done, that much you record the revenue. How much percentage is not done? Yeah, so small example, suppose advertisement. Advertisement is nothing but service. Who will do? Some TV company. Okay, some TV, NDTV wala. Okay, NDTV. Yeah, NDTV, assume one customer has come. Let us say one Bajaj company. Yeah, Bajaj company, they have motorbikes, you know that. Correct, na? If Bajaj company, they want to advertise their motor vehicle advertisement. Fine. Suppose now, what is that with respect to advertisement? When do you say, when NDTV can say that we have sold it, we serviced them? Only when advertisement appear to the public. Correct. When it is telecasted in your channel, that day only NDTV has a right to ask money. Correct. Suppose in this year 20 minutes of advertisement has happened. Correct. One time or daily 5 minutes. Next day another 5 minutes, something like that. 20 minutes or 20 hours or whatever it is. Okay, so 20 hours of advertisement happened in the current year. Yeah, that means I have completed the service for 20 hours. You record the 20 hours, correct na? 20 hours into 60 minutes into 1 minute is equal to, let us say, 20,000 rupees. It is not 20, it will be more than 1 lakh also sometimes. Depends on which timing may they are advertising. Yeah, this money is accrued by them because they have already provided the services to the customer. They can record the sales with respect to this 20 hours of job. Got it? Yeah, it depends on situation to situation. Right. Basically, when can I record it? When can I record the sale of services, my dear? When the service is completed, when service is performed by our company, that day you can record the sales basically. Okay, right. These services can be of divisible, indivisible nature. If it is indivisible, that means it is only one activity which you are supposed to complete it. That day only you will have right to collect the money. Yeah, before you say account debtor account debit to sales, do you have right to collect? Can I ask him and correct? Is he liable to pay me money? Correct. Now, do I have right to receive? Does he has the right? Does he has the obligation to pay me check once? Yes, sir. He has to pay me. That means then it must be divisible. If it is divisible based on percentage completion method, you recognize it. Otherwise, only when the substantial portion of work is completed, almost yes, I have done my job 100%. There is a main part of the work is completed, that day you record the sale. Otherwise, no. If he had already paid the money, then it is an advance to the company, but it is not a sales to us. Correct? Now, you remember, we are not following cash basis of accounting, we are following accrual. When it accrues to me only when I provide the services to my customer. And second condition is obviously as usual, same second condition. Now, next let's look at the last part, interest. With respect to interest, same second condition is the same, obviously, correct na? And what is the first condition? Interest, you know, it is accrual basis, that is time based accrual. How are you supposed to do it? Time based accrual. Yes, time based accrual. Yeah, you gave a loan. Sir, I gave a loan, sir. Yeah, you gave a loan. On which day you gave? 1st January 2020 I gave. How much loan you gave? Let us say 10 lakh. At the rate of 12% per annum you gave. Okay. But interest is payable. Let us say interest is payable only per annum once. That means 31st December 2020. That cost whoever has the borrower, he is going to pay us. Right. But sir, I have my financial year is 31st March 2020 is my financial year, sir. Correct. That means how many months time is up actually? 3 months time is up. Right. Do you get the money now? No, I don't get the money, but it is accrued to me because 3 months of time is over. Then I'll say, yes, it is my income. Then what do you record? What do you record? Interest receivable account, interest. Yeah, so we'll be recording interest receivable account debit to interest income. Okay, interest income. Like that. It is receivable. I have right to receive for 3 months. Okay, how much is 3 months? Like 10 lakh rupees, 12 means 1,20,000 per annum. 1,20,000 means per 3 months is equal to 30,000 rupees for the 3 months. We have the right to receive to the extent of 30,000 as on 31st March. So that is receivable for me. At the same time, that is my income. Got it? Right. Let us spend some time on the royalty part. Then only we'll move to dividend part. Okay, perfect. So when I go to royalty also you are supposed to do it. Royalty also will do it on accrual basis only. And this is also on accrual basis only. Yeah. Okay. But sir, what is accrual here? This accrual, you know, first royalty means for royalty for what? Royalty means there must be some copyright. Correct, na? Or some patent must be there. My copyright is used by the publisher. Correct. So he is printing the books. Then he has to pay me some royalty for that. Right. So now the question is, what is the agreement between us, between me and the publisher? That is important, na? Because sometimes it may be on time basis. I may say, because how many you print, how many you do not print, how many you sell, I don't care. Let us say 1 year you pay me 1 lakh rupees for my book. I may say that. Hope you understand. 1 year you pay me 1 lakh. It can be. Or it can be on sales. How many books you sell me? Okay, per unit. Okay, let's say 10% on the book price, something like that. Simply some percentage I'm keeping. Okay, right. So I cannot tell you, correct now, first, unless until accrual means if he sells a book, then it is accrued to me. Yeah, suppose book value is equal to 1,000 rupees, 10% I am supposed to get, then 10% is equal to 100 rupees per book. Correct. When he sells it to somebody, then 100 rupees is mine. But how do I, correct now, how do I know what is the agreement is saying? That's why what the standard says, standard will not tell on time basis or a number of goods basis. Standard says it is accrual as per the agreement. As per the agreement. So one has to look at the agreement terms and conditions. Accordingly, they are supposed to accrue. Okay, if it is on time basis, per annum is equal to 1 lakh, then 6 months time is up. Then yes, he is supposed to pay me. 6 months means 50,000 he is supposed to pay me. Here also journal entry will be same like here. That is royalty receivable account debit. You may be receiving it in the next year. Royalty receivable account debit to royalty income. Like this, you are supposed to record the journal entry. Got it? Done. Next, with respect to dividend, generally questions will be asked on dividend. Some tricky. I mean, just intentionally they will make it actually. Okay, right. I'll tell you. The dividend income, my dear, on dividend, you know, on dividend. I mean, dividend, when will it become when will it be an income? Yeah, when right to receive dividend is established. Right to receive. Yeah, right to receive dividend is established. Is established. Got it? When the right to receive dividend is established. When do you get the right to receive? When do you get the right to receive? Only when it is approved by AGM. When it is approved by AGM. If it is approved by AGM, yes, that day I have got the right to ask. correct na? So that day, suppose yes sir, this is happening on 30th August 2020, then that day only you should record, yes, that is dividend receivable account debit to dividend income. If it is not approved by them, correct na? If it is not approved by them, then I don't have right to ask for the dividend. Got my point? Yes. So example, I just for clarity, the 2019-20 financial year here, 2020-21 financial year here. For this financial year, they are giving on 30th August 2020, they are giving the dividend. AGM is conducted. In which day I should pass entry dividend income? I should pass on the same day. This is related to 2019-20 na? So shall I go back to 2019-20 and record? No. Why? Means dividend is not like income or expenditure, correct? Now for you it is an income, but it is not an expenditure for them. It is an appropriation of profit. It is an appropriation of profit what I got it, correct? It is not like matching concept and all cannot be possible with respect to dividend income. It is not income or expenditure, it is appropriation of profit. So you shouldn't see no matching. First of all, you are not supposed to go with the word matching word. Matching word is not matching here. Is it okay? That's it, my dear. This is with respect to, what is it, Nana? It is with respect to accounting standard 9. Okay. Yeah, let us look at now accounting standard 7. That is construction contracts. Construction contracts. This is also a small standard for revision. Not much actually. But they will be asking question actually. That is also there. Okay, see, this is what I told you. This is nothing but we are talking about revenue. Revenue means